Okay, and the potatoes. Good morning, everybody. Good morning from Wolverhampton. I think I can start with the headline of our new annual results book of 23, confident in what lies ahead. And I would say very confident in what lies ahead. And I think we can say that it is proven by our Q1 results. You can see we were able to add 200 million direct income generating assets into our balance sheet and let the portfolio grow to the rounded figure of 7 billion euros. Besides this, we still have a very nice investment pipeline of 500 million, and the combination of developments, acquisitions, energy investments. So very nice further deployment of our capital. And all of this is indeed based on a unique balance sheet with loan to value of 34%, and more important, a net debt to EBITDA of 6.6. By and with all of this, we can confirm our EPS growth for 24, growing up to 1.47. And I think very important in this stage, and for the first time since 5 quarters, we see an uplift in our portfolio value of 25 million. 25 million on the 200 million extra new investments. So I think, and I see spring in the air, I see spring in our results, even when outside spring is not there yet. And we blended well. I think we can say that Blend 27 is well received internally, externally. I think we started the year with a very clear new plan, building further on our strong fundamentals, and not only the strong fundamentals of WDP, but very important, it is based on built and disciplined, built on indeed very strong and good structural demand drivers and sound market dynamics. Yes, there is still good demand. It normalized, and let's say we have to work again when a building becomes free, but we are used to work for it, and that's our main and basic knowledge, so we know to do that. And besides this, we see indeed further very nice negotiations with our clients on our land bank to let's say to do further new developments. But indeed in those in this times of an economic downturn, it takes a little bit longer, but we still see a lot of very positive negotiations within our different teams and different regions. And like I said, we could load our balance sheet with 200 million euro direct yielding assets at an average yield of 9%. Besides the 500 million euro investment pipeline that is running, and above all this, we have almost 2 million square meters of development potential within the balance sheet. But even there, I think the most important is that we planted our flag again in France, and by let's say finalizing and realizing the investment of 75 million that we announced in the ABB, we could let the portfolio grow towards 250 million again. So I think this proved also to the market, to the brokers, to our colleagues, that we are, let's say, active again. And we feel that in France, the market is open and that we can grow. We see, again, possibilities. While on the contrary, for the moment, Germany is still too expensive. There, let's say, a lot of people are still thinking below the cash cost of capital. And then also very important, we could extract value out of the existing portfolio with an indexation of the leases by more than 3%, And we could get a positive rent reversion for 100,000 square meters of 15% in the existing portfolio. And even after an indexation of 3% and 50% higher rents in a small part of the portfolio, we still stay far below market rents, and the reversionary potential is still 13%. In the meantime, of course, permanently we stay neutralizing and we keep on investing in our PV capacity and further on in our energy infrastructure. All of this based on the balance sheet, like I said, and important is there that we still have almost 2 billion of free credit lines, so we have the capability to grow further, and we have the money to realize our blend program, and we could already use and, let's say, directly invest more than 50% of the ABB of last December. So let's say we could let the work and the money work for us. So I think this is indeed a perfect start of the year. Yes, Q1, it is only the start. A lot of things are in a startup modus, but I think it's a perfect start of the year. And to show a little bit how we can create value, and before answering all your questions, I would like to give some color on a very nice project and using this example of the way how WDP creates value. After 2 years of negotiation with the seller, local authorities, public authorities, we could finalize this deal, the villa. For the Belgian online, let's say it is the famous Chinese, it is the place of the famous Chinese trade park of Mr. Chris Peters more than 10 years ago. And it is old ideas, and it is an old brownfield, a not used piece of land for more than 30 years. But it was a very complex soil remediation. A soil remediation which is 18 million and which will take 1.5 years. But if you calculate, you will see that the soil remediation has a cost of more, is more than the land value. So we had to find solutions, and therefore we could also add some extra investments to the portfolio. But important is that by the end of 25, we will be ready for a new, unique development in the hotspot of logistics in Belgium, Willebroek, along the logistic highway, the A12, in the middle of the big cities, Antwerp, Brussels, Ghent, and Leuven. And we even launched on LinkedIn a request for innovative ideas to get all the ideas out of the market to create a unique project. And in the meantime, let's say by taking over this difficult brownfield redevelopment, we could also add 3 small units to our portfolio, but very nice ones. It are 3 times high-value logistics. 1, art logistics, top-class art logistics, pharma logistics, and tech logistics. So really high-value logistics at the right place, generating direct income. And another advantage of brownfields developments is that you don't have to pay the land directly. Let's say you can pay the land step by step during the remediation. So let's say a very nice complex deals, value creation, I would say developments, projects with brains for the future. So this is one of those little examples on where we try to create value every day with our different teams in the different countries. But I told enough now, and let's go to the questions.
To everyone, we're now open for the Q&A. Please raise your virtual hand, and we already have the first question coming in from Frederick from Kepler.
Yes, hi guys, good morning. I appreciate the new deal you just presented, which looks very exciting for you. I'm just curious, if I look at the Q1 in terms of new project that you found in Q1, you had 10 million euro in Romania. To me, from an historical point of view, it looks relatively limited. How do you see that evolving through the quarters?
Well, I think I answered that, let's say, all indirectly, Frederick. Yes, indeed, it is only 10 million in Q1, but I think this is also normal. Q1 is always the start, let's say, people starting to negotiate, to discuss with us about new projects, but most of them, let's say, the two most important finalizing moments are before summer and before the year end. And their Q1 and Q3 are always the most, let's say, the moments when we work the hardest, but when you don't see the results yet. But I can say that there are indeed that we are in the different platforms negotiating different very nice projects. And I would not say less than last year, on the contrary.
Okay. Maybe a second one. You mentioned that you have to do more work when it's vacant to attract tenants versus maybe 2 years ago, 1 year ago. Can you describe a bit what you do, and is it through higher rental incentives, or how can we read that? Thank you.
No, it's not. Let's say, but at a certain moment, 1 year, 1.5 years ago, let's say. Even when a building became free, you knew there was and somebody called directly even before it was empty. And now, let's say we have to put it on the website again, to speak with the brokers, to do the normal job. But it's not, let's say you can still rent it at the new rental levels, at the rental levels we wanted. And it's not that, let's say we have to give more rental incentives. No, it is just, you need to communicate that you have a possibility, that there is
you have to do
the normal
work of letting up a building in a market characterized by scarcity with upward prices. But the last couple of years it was also crazy because the building was already let before it became empty and there was no frictional vacancy. Now it's just the normal letting process in a scarce market.
But without price discussion and without any negative price discussion.
All right. And then a last one for me. I see you signed a 300 million package with IFC. Can you comment on the level of spread of the loan?
Yeah, so it's a repeat deal with IFC to deploy to Romania, and it is so it's a term loan which we will gradually take up over the next 18 months, and it comes at a spread over Euribor just below 150 basis points. But I need to add that this is the pricing level for a big ticket mid last year, when prices were still higher, and it's a big ticket with IFC, and it took some time to close, which is normal for these kind of procedures. If we would do it now, it would be 25 bips lower.
Okay. You said 100 bips, right?
150. It just the margin, the credit spread is just below 150 bips.
150. Okay, thanks.
But if it were today, it would be 25 basis points lower. It was just the price of mid last year.
Okay, understood. Thank you very much.
Next question from Wim Levy, KBC Securities.
Yes, hi, good morning. I hope you can hear me.
Yes.
Okay, fine. I've got 2 questions. One is also going further into the Willebroek brownfield. Very interesting. You explained that the cost remediation was even more than the land value. Can you just explain a little bit what the issue exactly was with the soil? I'm not that familiar with the A12.
Well, let's say it is. Let's say after fully analyzing the soil and together with a very specialized but internationally known soil remediation company, DEME, also quoted the dredging group. Let's say we came out at a proven by OVAM soil remediation of 18 million. And if you then divide 18 million by 50,000 square meters, you come at 360 euro per square meter, which is more than land value. So the seller had to compensate it by adding those very small but very interesting value added and high value logistic buildings in order, let's say, to get to a neutral result.
And just to add, because you mentioned, I'm not familiar with the A12, it's just on that site. There is a problem with that site.
Yeah,
actually, just that site on which there is pollutive material and it needs to be removed. We made the assessment and we deducted it in full from the price of the other buildings we acquired. So we will just, in the end, for us, it will be economically after the soil remediation. It will be economically as if we buy the land at market value, and we deducted the full soil remediation of the overall price of the transaction, and it is covered by, it is back to back by a specialist in soil remediation.
So, for example, when we got this all for free, but now we have to invest in the soil remediation.
Okay, and you refer to Chris Peters. Is the Flemish government involved at all in this project?
No. It was 10 years ago, for those with a good memory. 10 years ago, Chris Peters announced a big new Chinese trademark on that piece of land, but nobody ever realized it, and because nobody could overcome the soil remediation. And we did, and we realized, let's say, in a tripartite between OVAM, OVAM, the community, the seller, and we, and DEME.
And DEME as a guaranteed. Yeah. Okay, so that's all clear. Okay, my second question was on the cost of debt. You explained in your results that the proactive hedging pushed down the debt cost of debt to 1.7 from 1.9. Is there more potential for that, or is that kind of that potential used up now?
Yeah, it's we didn't sign any new hedges. It's based on the hedges we signed predominantly early 22. When in early 22 we signed 1 billion of hedges at almost 0%, and we still benefit from that. It's also a bit a technical effect because we are slightly overhedged today after the ABB, and because then technically you reduce the amount of debt and save your interest cost on the variable interest rate loans, but the benefit of the hedges which are in the money is still there. That's why technically the cost of debt came down a bit Q on Q with 20 bips to 1.7%. For the remainder of the year, it will increase a bit as we draw again on the floating rate credit facilities, but it will still be this year below 2%.
Right, and is it then pro rata, as you spent like 2/3 of the capital increase, that 2/3 of the over hedge has been used up? Is that a fair assumption?
Yeah, we look at more at the global level, and the hedge ratio came down from 120% to 112%, and by summer it should also further decline, and by the end of the year should revert back to 100%.
Okay, all right, thanks. Those were my questions.
Marius from SocGen.
Hi, good morning. Thanks for taking my questions. It's Marius here from Bernstein. Just a couple of remaining questions from my side. I noticed you've mentioned a few times about negotiating, leasing, and the development pipeline. I noticed that it was the pre-letting progress was pretty flat in the period, hovering around the 70% level. Any comments you can provide on how quickly we could expect this to advance over the coming quarters and the negotiations you're having? And then secondly, just on your operating margin, notice that tick down year over year. Again, any comments that can be provided and what you expect in terms of trends throughout the year? Thank you.
The first one. Yeah, so let's say the pre-leasing ratio of 17% was indeed, let's say, not that we changed our strategy to start developments unlet, but it was due, like we said in the year results, it was due to some specific reasons. Let's say in Grimbergen, it was that we won a tender and could, let's say, get the project, but it was with the promise also there to do the soil remediation and to realize that brownfield development. And then the promise was there that we had to start also with the development. The other one was in Schiphol. And so let's say it's not a change of strategy, it's a little bit more specific due to specificalities of some projects.
But we are confident that it will be leased up by completion. And then the second question on the operating margin, which is indeed down year on year to 89%, but that has a specific reason because in last year there was a one-off of 2 million euro in the G&E expenses, a positive one-off, and that fell away. So that's why year on year the margin has dropped. And also know that in Q1, because of the fact that we need to reflect as a result of IFRIC 21 all the property taxes which are net at the charge of WDP, we need to reflect that in our results. That Q1 is always the quarter with the lowest operating margin, and it was perfectly in line with the budget, with our internal budget, for which the full year budget is in our annual report, and the full year budget has an operating margin target of just over 90%. So it's in tune with that year figure.
Very clear, thank you. Just on the pre-letting, I take your point on the specific reasons, but should we expect this to continue to tick up over the year, but probably remain a bit below prior levels because of these specific reasons?
Yes. It will gradually be leased up towards completion. Exactly. And in the meantime, when we add projects, they should normally be pre-leased to conform our strategy.
Great, thank you very much.
A question from Ina from Petercam.
Yes, good morning, and thank you very much for the presentation. Two questions from my side, just to come back on Marius's question on the operating margin. The main increase from what I see is related to the G&A expenses. Is it fair to assume that the one-off was related to that specifically, the one-off from last year?
Yeah, it was in the G&A expenses. Plus 2 million was a one-off in the G&A expenses of last year.
Okay, and the target margin for 90% that is communicated for 2024, should we assume that this is something that you will be targeting also going forward?
Yes, absolutely. Yeah, we strive to copy the profitability of our existing business model as we grow further and expand, and that is an operating margin of at least 90%. Yes, that's our assumption.
Okay, that's clear. Thank you. And then just a last question on the market, because we've started to see quite an uptick in terms of transactions, certainly in France, and I think some of your peers have commented that they're seeing quite a few more potential acquisitions opportunities. Could you perhaps comment on how you experience this, and also if there are any particular markets that really stand out?
Well, like I said, Ina, I think, yes, we see a reopening of the French market. I think people accept the new cash cost of capital being, let's say, at least 5%. And there you see, let's say, step by step, new files coming to the market, while on the contrary, in German, it's still difficult to accept that the cash cost of capital is 5, and I think I would say the German market is still more frozen by NAV And the fact that they are still at 4.5 in their valuation, they don't want to move because if they do something, it would change their NAV, and that is still at 4.5. So that market is still frozen.
Okay, that's clear. And is there any particular background in terms of sellers that are looking or are placing the assets on the market?
No, they're different from small to big ones. People who waited, of course, the last 2 years.
I think also a
bit
rotation.
Yeah.
Funds, not let's say that it would look as distressed or whatever. It's more rotation in funds, people who have waited to sell and need to sell it because they have a mandate in their funds, which has, for example, a finite lifetime or some optimization in there.
But it's not one sector or one niche specifically, no.
But there is more liquidity in the market and more things opening up gradually in France.
Very clear. Thank you very much.
Steven from ABN.
Hi, good morning, and of course, thank you for taking my questions. Besides France, you mentioned that Germany is a bit more closed, but we see peers acquiring land and brownfield sites in Germany. So apparently they disagree with you that Germany is closed or too expensive. Do you have any idea why this is different, why you see this different than peers, or could you comment on the availability of land and the land prices between France and Germany?
It's a difference. What I meant, Stephen, was on acquisitions. And what I said was on the acquisition side, where you say it's about land and brownfields redevelopments. There, indeed, we have seen some transactions of our colleagues, let's say, who are deeper in the markets and who are, let's say, deeper in those markets and know, like we can realize here in Belgium, those kind of deals. They were able to do that. They have bigger teams than we have in Germany. So there's a difference between land and acquisitions, and the difference between land price. I think that Germany is very high, has very high land prices. Depending on the regions, it's also, of course, very the difference between, let's say, Eastern Germany or Leipzig versus Munich, that's totally different. That are different worlds. It's a big country. In France, land values, except around Paris, are still lower versus, let's say, the Benelux and Germany. There you still have, land stays cheaper. But even when it's cheaper, it's difficult to find.
Okay, clear. Are you expecting to increase your presence then in Germany? To maybe invest more to build teams there, or is that not in the plans?
Yeah, we really have the intention to build out France and Germany. Let's say by 27, we want to have 2 very nice portfolios with 2 teams, with 2 local teams and extra, so that we can grow from 3 platforms to 5 platforms, let's say by 27. That's one of the main goals of Blend 27.
Okay, very clear.
Important is, Stephen, that we want to do it profitable. We want to grow, we like to grow, but we want to do it profitable so that, and of course, depending on how strategic it is, we can do something extra. But in the end, we want to grow from 3 platforms to 5 platforms in a profitable way.
Yeah, okay. That is very clear. Then my final question, more broadly on the markets. So could you comment on the Dutch, Belgian and Romanian markets, what vacancy levels are and how speculative developments are going, if they decrease or not?
Hey, Stephen. So in general, when you compare Western European markets, and it's roughly the same when you're looking at Belgium or the Netherlands, you're looking at vacancy rates at below 3%. And on micro markets, even lower, for example, on the A12 between Antwerp and Brussels. In Romania, even when you're looking at vacancy rates, you're at a sub-5 level, which is historically one of the strongest markets over there. Even in the Bucharest region, you're at 4.5%, where typically the peers are developing more on a speculative basis. When you're looking at new speculative supply coming on the market, it's actually quite limited to around 10 to 15% of annual take-up, and supply has actually come down and has been pre-let approximately 70 to 80%. So the risk on any supply overhang in the short term is relatively limited.
Very clear. Thank you so much.
And then we have another question from Kenneth from Barclays.
Hello. Thanks for taking my question. Just looking at your acquisitions during Q1, I see it's very profitable, kind of 6.6% gross yields. When you compare it with your pipeline, development pipeline yield, and also the fact that pre-let is kind of flat, how would you still kind of balance your property additions still more towards development, or would you take a different stance today?
No, it's in function of the opportunities. We have always historically been opportunistic in there in what is profitable. So in some cycles you need to develop more. In other times you can again acquire more. Now in the recent years we were full-fledged developments because the market was too expensive. Now we live in a different world and we think we can acquire more. It's just in function of the opportunities, in function of the specific location assets, if it's a good addition to the portfolio and whether it's profitable. The bulk of our investment plan, Blend 27, is still the bulk of the capex is still built on the new pre-let development projects, and then supplemented by selective acquisitions. And we have never been there the market maker, but if we can do some interesting off-market deals or buy out the neighbors on some locations, then we can do it. And we have the money to grow further and to capture and snap up some deals.
Thank you. And that's all for me.
Frederick, you have a follow-up question?
Yes, I just wanted to rebound on your comment, Joost, on Germany, where you said that yield would be a bit considered too low today at 4.5% and needs to move up for you to really be considered as attractive. But then how can we interpret your net initial yield of 4.3% in your portfolio for Germany?
This 4.3% yield in our German portfolio needs to go up, that's for sure. Sorry, but yeah, it's ridiculous. That yield on
valuators
4.3% is just based on the valuators, and they themselves base themselves on no transactions. On the historical transactions, there has been almost no liquidity in the German market because it is paralyzed by the NAV dilemma. If they sell at a higher yield, then they need to mark down their assets. We have already done that for the bulk of our portfolio. Germany is only small, but it will go up and converge towards the rest of Europe. We don't see a reason why that should be materially different.
That's why I say that, and I think it's proven also in our balance sheet that Germany is frozen by NAV.
Yeah. And specifically also you have for our portfolio in Germany, there is also one important comment is that it is also substantially underlet too.
Substantially under-rented.
Substantially under-rented as well. But in any case, it will go up.
Yeah.
Okay, so the reversionary yield is actually much higher than 4.3 on your portfolio. Okay, but then I appreciate that Germany is very small, but can we say that for the rest of the countries that appraisers are now in line with the market, or?
Yeah, absolutely. Yeah, absolutely. Okay. Yeah, absolutely.
And in Germany, it is in line with all the valuations. Yeah, all the valuations.
Yeah, it is just our humble opinion that it should increase because we see the market as blocked as a result of it, but it is based on the valuators in each country. But we should go up.
There are files today, Frederick, where people say, if we don't have or we don't get a 4.5 net initial yield, we don't sell because this is our valuation is at 4.5.
Thank you.
It is what it is.
It is what it is. Thank you very much.
Gert de Mesure?
Yes, good morning, gentlemen. Another question on that valuation. So Segro yesterday said that we have reached the bottom and that there is a turning point nearing. What can you say about that, apart from Germany, of course?
We follow that reasoning, absolutely. You see it also in our results. Let's say the bulk of our Western European portfolio is valued at a net initial yield of 5%, which will also automatically already expand over the next 12 months by around 20-25 bips because of the reversion and the indexation. And that's perfectly in line with the market, based on also the fact that we have a reversionary yield over 6%.
Okay.
That's why I said spring was in our valuation.
Yeah, and for the first time, you have now seen since Q4 22, the underlying values of the existing portfolio have been flat in Q1.
All right, thank you. And then there was some specific talk about a renting or lease contract in the region of Liège at 80 euros per square meter. It was not signed yet, but what can you say? That is that 80? Will that become the new normal, or is that a wet dream of some people?
Liège is a specific region, and Liège will never be a normal market. And let's say it will never be, let's say the example for the rest of the market. And of course, we cannot speak about what is going on in the market if it's not signed. But let's say, let us be honest, 80 is not the new normal in Belgium.
Okay, thank you. Then a small remark. I would like to thank you for the extended reporting here on Q1. Some foreign competitors are reporting less, so maybe you should also do that in order to further improve your margin. Okay, thank you.
Thank you. Then we have a follow-up, another question coming in from Nadir.
Hello.
Hey.
Hi, good morning. Sorry, my camera wasn't working there. Just a quick question on the, I think the general market consensus about the 4 versus 5%, where I think sellers want to sell at 4%, buyers want to buy at 4%, sellers want to sell at 5%, and how you're seeing that kind of in your transactions generally, and how you're seeing that play out in your interactions with buyers and sellers.
Yeah, I think there we said in Germany it's difficult to make a deal. There are also less deals in Germany because of this. And in France, it's more opening up, and you have seen.
I think indeed in France, the market is now, let's say in France, also brokers accept the fact that the cash cost of capital is 5, and let's say doing developments at 7, so that depending on the location, the quality, the reversionary potential, that the acquisition market needs to be between 5 and 7. And that is also what brokers are advising to their clients, and let's say that range is accepted. While in Germany, also the brokers, a lot of the brokers say, no, we don't want to see and we don't accept offers starting with a 5 because our market in Germany is still below 5. And so, and then the sellers say, yeah, our NAV is at 4.5. If you don't offer 4.5, we don't sell. And so we see portfolios that are already more than 1 year, 2 years on the market, but who are not sold because people still hope. Mick calls it the strategy of the hope, that they still hope to get 4.5%. And so they wait. And if you don't have to sell, you can wait. And then, yes, sometimes you see a small deal for somebody who absolutely needs to buy. And then you see sometimes 4.5, 4.77, but that's not a real market. There, the people that in general, the market does not accept the cash cost of capital of 5.
Yeah, and I think baseline is the reason why the French market is open is because sellers are cognizant of the fact that any yield should rise with a 5.
Yeah.
Wonderful. Thank you so much for your time. Thank you.
Welcome.
And then we have a final question from Ilkir.
Hi. Yes, thank you again for the presentation. I had a final question on the REIT regime, actually, of your company. I was reading in your annual report that the Netherlands, from 2025 onwards, now have established this abolishment. And as far as I know, you also have the status in Belgium and France. And could you maybe shed light on the position in these countries, if in the future also this can be expected there, or if this is not that expected?
No, we don't expect any changes there. And of course, the main one is the Belgian REIT regime, which is functioning well and for which is a very important segment on the Brussels Stock Exchange. And there are no specific talks or issues.
I would say on the contrary.
It's to the contrary, performing very well and a very good, considered as a very good regime, one of the best ones in Europe in terms of design and success. I think the Dutch situation is a bit specific, and it actually is opposite to the trend in Europe, where more and more countries are adopting a REIT regime because they are aware of what it could bring, a stable listed REIT regime for their country, for investments in infrastructure, for public savings through REITs. So there are no issues expected. To the contrary, and in the Netherlands, it's a bit of a pity situation, and it will indeed be abolished as from 25.
But in the Netherlands, it's not, let's say, the REIT regime which has been abolished, but it was a broader regime of which the REITs were only a small part of it. So it was side damage.
Okay, thank you.
This concludes so far the Q&A, unless anyone has another follow-up question. And in that case, I'd like to hand the word back to Joost.
So thank you for the questions. Thank you for listening. And I would say, yes, spring is coming, and we are confident, and we are, let's say, looking forward to realize our Blend 27 projects. And we see a lot of possibilities and opportunities before us. And we are supported by a very good and liquid balance sheet that we can use the coming period in order to realize all our plans. Thank you, and see you soon.
Thank you.
Thank you.
Thank you. Bye.
Thanks.
Thank you.